Imagine you woke up today with $50,000 sitting in your bank account, completely free to invest. You want this money to grow because keeping it in a regular savings account means inflation is slowly chewing it away. Inflation is the gradual decline of how much your money can buy over time. Naturally, you search the internet for advice and immediately run into two very loud groups of people shouting at each other. One side insists that real estate is the only real path to wealth because you can touch it and nobody is making any more land. The other side claims that buying stocks is far superior because you do not have to fix a leaky toilet at 2 in the morning. Both sides sound incredibly convincing, and both sides have plenty of millionaires to point to as proof. This decision matters because choosing the wrong path for your personality can end up costing you years of hard work and thousands of dollars. Today, we are going to look past the hype and figure out which option actually makes sense for your life. By the end of this, you will know exactly which path fits your personality and how to start moving forward. Let us start with real estate, and the biggest reason people absolutely love it. That reason is leverage, which is simply using borrowed money to buy an asset. To understand why this is a massive deal, imagine you want to buy a property worth $200,000. If you had to pay with your own cash, you would need the full $200,000, which takes forever to save. But a bank will happily let you put down $40,000 of your own money and lend you the remaining $160,000. Now, let's say the value of that house goes up by 10%, making it worth $220,000. You did not just make 10% on your $40,000 investment. You actually made $20,000 of profit, which is a massive 50% return on your initial cash. This is why people get hooked on real estate. It allows ordinary people to control huge assets with relatively small amounts of money. Of course, that beautiful 50% gain on paper comes with a catch that real estate gurus love to ignore. Owning a rental property is not a passive investment. It is a part-time job. When you own a home, you are responsible for everything that goes wrong with it. That means when a water pipe bursts on a cold Sunday night, you are the one who has to find a plumber and pay a premium rate to fix it. You also have to deal with the reality of tenants. Most renters are great, but eventually you might get one who stops paying rent and refuses to leave. Suddenly, your steady stream of monthly income disappears, and you are stuck paying a mortgage out of your own pocket while fighting a costly court battle. On top of that, buying and selling property is incredibly expensive. You have to pay agents, lawyers, inspectors, and government taxes, which can easily eat up 10% of the home value before you make a single dollar. Real estate can make you rich, but it demands your time, your patience, and your sanity.
This brings us to the stock market, which offers an entirely different way of making money. When you buy a stock, you are buying a tiny piece of an actual living business. If you buy a share of a massive coffee chain, you literally own a microscopic fraction of their coffee machines, their beans, and their future profits. The best part about this is that you do not have to do any actual work. You do not have to manage employees, handle supply chains, or deal with angry customers. Hundreds of highly paid executives and thousands of workers are going to work every single day to make you richer while you sit on your couch. This setup allows your money to benefit from compound interest, which is when your earnings start earning their own earnings. Over time, this compounding effect turns a small initial sum into a massive snowball of wealth. It is the ultimate form of lazy investing because the system does all the heavy lifting for you. You do not need to be a business genius. You just need to buy a piece of the economy and wait. Another massive advantage of the stock market is something called liquidity. Liquidity is just a fancy word for how fast and easily you can turn an investment back into cash without losing value. If you need $10,000 tomorrow for an emergency, you can tap a button on your phone and sell your stocks in 3 seconds. The money will be in your bank account before you even finish your morning coffee. Now, compare that to trying to sell a 3-bedroom suburban house. Selling a house takes months of listing, showing, negotiating, and waiting for the buyer's bank to approve their loan. If you need cash fast in real estate, you are forced to sell at a massive discount or take out a high-interest loan. Stocks give you the freedom to change your mind whenever you want. You can change your entire investment strategy on a rainy afternoon without paying thousands of dollars in transaction fees. For anyone who values flexibility and peace of mind, liquidity is an absolute game changer. If stocks are so easy and liquid, you might wonder why everyone is not a stock market millionaire. The answer lies in human psychology and a brutal concept called volatility. Volatility is how quickly and wildly the price of an asset bounces up and down. When you own a house, you do not see its value change in real time. Nobody stands on your front lawn with a megaphone at noon every day shouting out what your house is worth. Because you do not know the price fluctuated by 2% today, you don't panic. But with stocks, you can see the value of your net worth crash by 20% in a single week on your phone screen. Watching your hard-earned savings evaporate in real time triggers a deep primal fear in our brains. Many investors cannot handle this pressure and end up panic selling their stocks at the worst possible moment. They buy when everyone is excited and sell when everyone is terrified, which is a guaranteed way to lose money.
Let us look at how the actual numbers stack up over decades of history. Historically, the US stock market has returned about 10% per year on average before adjusting for inflation. Real estate has historically grown at a much slower rate of around 3 to 4% per year, which barely beats inflation. But we have to remember the power of leverage we talked about earlier. If you put $20,000 into stocks and they grow by 10%, you made $2,000. If you use that same $20,000 as a down payment to buy a $100,000 rental property and it grows by only 4%, you made $4,000. Plus, your tenants are paying down your mortgage every single month, slowly building your equity. Equity is the portion of the property that you actually own outright rather than owe to the bank. So even though stocks grow faster on paper, real estate can match or even beat those returns because you are playing with the bank's money. But remember, if the housing market goes down, that leverage works in reverse, and you can quickly owe the bank more than your house is worth. To make an honest comparison, we have to look at the money that leaks out of both investments over time. With real estate, the leaks are constant and highly visible. You have property taxes, home insurance, maintenance costs, and HOA fees that you must pay every single year. These ongoing expenses can easily eat up a massive chunk of your rental income. With stocks, the costs are much smaller, but they are often invisible. If you invest in mutual funds or index funds, you pay an expense ratio. An expense ratio is a small annual fee charged by the fund manager to run the investment for you. While a fee of 1% sounds tiny, it can quietly compound over 30 years and take away a huge portion of your final wealth. You also have to consider taxes when you sell your investments. Real estate offers incredible tax loopholes that let you swap properties without paying taxes immediately, while stock investors usually have to pay up as soon as they sell for a profit. So after looking at all the facts, how do you actually decide where to put your money? The choice is less about the math and much more about who you are as a person. If you enjoy managing projects, negotiating deals, and do not mind getting your hands dirty with real-world problems, real estate is an incredible wealth builder. It gives you control, tangible security, and the ability to build a local empire. On the other hand, if you value your free time, hate dealing with people, and want your money to grow quietly in the background while you sleep, stocks are the clear winner. They give you instant freedom, zero physical maintenance, and the ability to start with as little as $5. Many successful people do not even choose. They simply do both once they have enough capital. They use the steady cash flow from real estate to buy stocks, or they use stock market gains to buy property. The worst thing you can do is stand on the sidelines doing nothing because you are waiting for the perfect moment. Just remember that this video is for educational purposes and is not personal financial advice, so make sure to do your own research before jumping in.